Something happened in the global financial system recently that you won't hear about on the evening news. $7 trillion. In just a matter of days, the global market cap, led by a massive shock in the gold and silver sectors, saw an estimated $7 trillion in value evaporate. Many call it a correction. TV analysts mumble about temporary turbulence. But if you are watching your broker's screen and seeing your life savings melt away, know this: they are lying to you. This is not a glitch, it is a signal. This is the first visible crack in the foundation that has held the global economy together for the last 50 years. We have officially passed the point of no return. The paper era, the epoch where a number on a bank screen was considered wealth, ended on February 3rd, 2026. Right now, you are asking the right questions. What is the gold price today? How do I protect my money from inflation? But you are looking for answers using the tools of the old world. Today, we are performing a full forensic autopsy on what actually happened this week. I will show you why China is currently playing an economic checkmate using a liquidity vacuum, why your mortgage is detaching from reality, and most importantly, I will name exactly 5 assets that have survived the collapse of every empire in the last 100 years. Those who own them today will become the new masters of reality. Those who hold paper will lose everything. Watch closely. The next 20 minutes will define your financial future for the next decade. The timeline of the crash, why it happened now. But before we get to the assets, we need to reconstruct the chain of events. Why did the market crash right now? Let's rewind the tape. January 30th. The White House makes an announcement that sends Wall Street into shock. A new Fed chair has been nominated, Kevin Warsh. To an ordinary person, it's just a name. But for the algorithms managing trillions, it was a distress signal. Warsh is a hawk. He is a man who spent years criticizing the Fed for printing easy money. The market instantly understood. The party is over. If Warsh comes to power, he will stop rescuing markets with liquidity. In that same second, a panic sell-off of paper assets began. From tech stocks to gold futures, traders sold everything they could to get into cash. This is what triggered the margin calls. Imagine dominoes. One fund falls, it desperately needs cash, it sells gold. The price drops, and the next fund falls behind it. This was not a correction of metal's value. This was a liquidation of paper obligations. And while everyone was watching the falling charts, the scariest thing was happening behind the curtain. Physical metal started to disappear. Chapter 1: The Bag of Ghosts and the Silver Squeeze. To understand why prices are behaving irrationally, we need to look behind the curtain of the London and New York exchanges. For decades, the West played a dangerous game. We turned gold and silver into an abstraction, just a line on a chart. Imagine a coat check at a theater. You hand in your coat and get a ticket. But what if the attendant issued 356 tickets for one coat? As long as everyone is sitting in the theater watching the show, the system works. The attendant is rich, the audience is calm. But what happens when the show ends and the fire alarm is screaming throughout the theater? All 356 people run for that same coat. As of 2026, the ratio of paper silver to real physical metal reached an insane 356 to 1. This is what I call the bag of ghosts. Futures, options, ETFs, they claim to own the metal, but the metal is not there. The problem is not that the metal doesn't exist in nature. The problem is that in moments of panic, demand for physical delivery spikes vertically, while the fast available metal is limited. That is when the price on your screen detaches from reality. Why did this blow up now? Because silver is no longer just money. It is the blood of modern industry. You cannot build an AI chip out of a paper contract. You cannot assemble a combat drone out of a digital receipt. You need physical metal. Industry realized this first. Apple, Tesla, defense contractors, they are no longer buying futures. They are demanding physical delivery to the factory. And suddenly, it turned out that vaults are emptying faster than they can be refilled. This is a global bank run on physical matter. Chapter 2: The Shanghai Vacuum and the Dollar General. But here is the mechanism that is killing the West right now. It is the Shanghai Arbitrage. Follow the hands. The price of silver in the West is artificially suppressed by paper derivatives. It hovers around $80 per ounce. In China, where only physical metal is valued, the price is real, $97 and higher. This creates a premium of 20 to 30%, roughly $17 to $23 of pure profit per ounce. In a normal world, traders would quickly level the prices. But China created a one-way valve. Gold and silver can enter Shanghai, but by law, they cannot be exported back. It works like a giant vacuum pump. Western banks see an opportunity for profit. They buy metal in London, ship it to Shanghai, and sell it higher. But for the Western system, this is suicide. Every bar that flies to China is melted down, re-stamped, and disappears forever from Western ledgers. We are selling China the rope to hang us with, just for short-term profit. On February 3, 2026, legendary investor Ray Dalio said a phrase that explains everything. We are in a capital war. What did he mean? He meant that countries are starting to lock the exits. When you see price gaps like this between Shanghai and London, that is capital war. There are walls being built around your money. You might ask, why does the US allow this? Because the dollar is no longer neutral. We have entered the era of the dollar general. By freezing Iran's accounts and crashing their rial to 1.5 million per dollar, the US sent a signal. If you are not with us, your money is not yours. In response, the world is building lifeboats, BRICS Pay, and the digital yuan. And look at the US debt, $38.43 trillion. China used to buy our debt. Now everything has changed. China has been steadily reducing its holdings, down over 47% from the 2013 peak of $1.32 trillion to just $682 billion today. That is $640 billion moved out of U.S. debt over a decade, and the pace is accelerating. There are no buyers left, and when no one buys the debt, rates rise, and your mortgage goes to the moon. Chapter 3: The Time Test and the Death Spiral. What does this mean for you personally? We are witnessing a brutal K-shaped reality. The top arm of the K represents asset owners. They get richer because inflation pumps up prices. The bottom arm represents those living on a paycheck. Let's run the time test. In 1960, the average man could buy 1.6 ounces of gold with 1 week of work. Today, in 2026, to buy that same 1.6 ounces, you have to work 22 weeks. Think about that. You did not become a worse worker. Technology did not get worse. The ruler you are paid with simply shrank by 95%. You are being robbed not through taxes, but through the debasement of your time. Smart money knows this. Why is Warren Buffett sitting on a cash pile of $381 billion? Why did he sell off America's sacred cows, Apple and Bank of America? Because he knows, in a storm, paper profits burn. We are in the emergency room, and the economy's heartbeat is flatlining. Chapter 4: The Survival Blueprint and the Final Verdict. Wealth never disappears. It simply transfers from the hands of those holding paper scraps to the hands of those holding reality. We analyzed 100 years of crises. Here are the 5 assets that always survive. Write this down. 1. Physical precious metals, gold and silver. These are the only forms of money that cannot be printed at a politician's whim and cannot be frozen with the push of a button. The rule is simple. If you don't hold it in your hands, you don't own it. Foreign hard currencies outside the system. When your local currency collapses, You need an escape valve, like the Swiss franc or the Singapore dollar. But be careful. Keep them in cash or in accounts outside your country's jurisdiction. 3. Productive export equities. Do not buy banks. Do not buy tech stocks living on easy credit. Buy companies that produce real things: food, energy, fertilizers. When the local currency falls, their profits rise. 4. Tactical liquidity. In the acute phase of a crisis, gold won't buy bread. Medicine, fuel, generators, and even alcohol as a medium of exchange. This is the survival base. 5. Agricultural land. Productive agricultural land. Calories always beat rent. This is an asset that literally feeds you. What to avoid? History is unambiguous. Bonds and savings accounts in a collapsing currency go to zero. Being a creditor to a sinking state is the fastest route to poverty. And beware the final trap: CBDCs, central bank digital currencies. The system will try to lock you into a digital dollar so they can track every penny and impose negative interest rates to tax your savings into oblivion. The era of easy money is over. We are moving from a world of efficiency to a world of resiliency. Checkmate has already been called. The financial vacuum is at full power. Do not wait for the Fed or the government to officially announce a crisis. When they do, the gates will be closed. Become your own central bank, today, because the storm is not approaching, it is already here. There is only one question left: which side of the wealth transfer will you be on?